All right, crypto market updates. Looking at Bitcoin. Bitcoin is testing support. It's kind of grinding it at support right now. If you watch the price action on the smaller time frames on the 1 hour, there's a lot of these very sharp wicks and multiple different directions, right? So last night we're here, boom, fast wick up, sell off, fast wick up. Oh no, sorry, last night we weren't here. Last night we were here. So we're seeing this hit a new low on Bitfinex, fast wick up, sell off. So there's certainly a battle between bulls and bears at the support level. Obviously, if we snap, then it could probably end up the next major level to test is that 3K level. And then obviously if it breaks, and if it did hit that 3K level, that would be an 85% drop off the top, which would be the exact same drop off the top as 2000 and the last bear trend, pretty much, right? So if it goes lower than that, then that's actually a bigger drop than we've seen in the previous two massive corrections on Bitcoin, right? It means it will have dropped lower than 2015, and it means it will have dropped lower than this area right here. I know, so it's always possible. Anything is possible in crypto, and if that did happen, then obviously we're looking at major bloodbath. Stock markets have been bleeding out too. Dow Jones. Last month, I was playing stocks a bit this year. I had some weed stocks. I bought Deutsche Bank and all that kind of stuff. But last month, I had when the Dow Jones looked a little bit toppy to me, I basically just sold it all into cash and just waiting. And this year, I'm going to add to my stock investment account. And I'm just I'm kind of waiting to see how this will play out, right? You have the Dow Jones. It could be printing a head and shoulders here as we speak. But just had a lot of, in my opinion, it had a lot of those reversal signs. 10 years of going straight up. Bearish divergence. Just a lot of reversals. So we don't know if this will just be a small correction or if it'll top out or whatnot. But let's see. So you can see here that we had pointed this out before, that it kind of made a new higher high, but on the RSI made a lower high. And we see this a lot in crypto. I actually think that crypto traders and investors are more used to market crashes and more used to, they're a little bit more cautious at cashing out when we see what may be a top. We don't know for sure if this will be a top, but if this was a crypto market, it would certainly be showing some signs of toppiness, right? So also like banking stocks, they're not doing very well. European banking stocks and so on and so forth. In my opinion, this is just my personal opinion, but I think that we've just had too much credit expansion, too much cheap debt. We do have a large global debt bubble. We have a lot of large companies that expanded aggressively with very small profit margins and borrowing a lot of cheap debt on low interest rates. And then I was also talking about how I saw some kind of like euphoria moments, right? I saw a lot of euphoria moments in the markets, like Trump bragging about how the stock market is doing so good, $1 trillion market caps on Amazon and Apple. Those are like big euphoria milestones, right? It's kind of like Bitcoin hitting 20K. It's a big milestone, right? Taking over the world, market's doing so great, so on and so forth, right? So we've seen that. So question is, When would you start to get back into the stock market? Let's just go back to this chart. My opinion, what I'm waiting, I'm playing a waiting game. Like if everything recovers next year and we don't go into a recession, I'll be like, okay, well now I can go hunting for some stocks. The stocks that I would like to buy, the kind of portfolio that I would like to buy is high dividend returns. I'd like to build a portfolio that has relatively stable dollar value, doesn't have a lot of volatility and fluctuation, but pays pretty much good returns. So, I'd have to really research and stuff. But in the last recession, and we might not enter into one, right? This is just, obviously it's all speculative. Hindsight's 2020. We'll only know the outcome after the fact. But if we did have a recession similar to 2018, then I would just kind of look at this similar to other markets. Either, maybe we come and have to retest these levels. In this area, we actually dropped a bit lower. But if we did end up keeling over, then I would probably be a buyer down over in this area. Now that would be obviously pretty bad, and I don't know how that would affect crypto. Probably wouldn't be that good for crypto. We haven't really seen how crypto responds to a global recession, right? But we know that other countries like Europe and stuff, like their markets have been getting hammered, right? Gold has actually kind of been going up a little bit. And I like gold, I like gold in general. The reason why I like gold is you just, no matter what one speculates in or invests in, you just can't beat something that's been around for 5,000 plus years as a recognized form of value, right? Very and it's kind of slow, right? Obviously one doesn't want to buy gold up here type of thing, but anyways, just my thoughts. Interesting to point out the overall stock market. Bitcoin's kind of at a place right now where it needs to I did have some platinum, and platinum has not been going up with gold. Platinum did dump with other things. So, something else I want to point out. The whole sell on the news obviously works in other markets too, right? Remember legalization in Canada? Well, we new paradigm, legalization. This is a pot stock. Sell on the news, just like any other market, right? Even looked like it was breaking the all-time high. So it's a breakout. Nope. Boom. I didn't sell the top. I should have. I initially bought it as kind of like a longer term investment. So when it broke out and it was leading up to the news, the trader in me is like, you should probably sell on the news. But then, the investor's like, oh, I'll hold this as a long-term investment. And then it was breaking down and selling on the news. I was like, okay, I'm not going to hold this. I do want to invest in this long-term, but I can't hold. Because I bought on the 16th. Anyways, I bought here. There was a little bit of a, let me just get onto the smaller time frame here. Bought right on this dip right there. So I didn't want to give all of that back to the market. And obviously I would have if I just held that. It's kind of like a double top. But I am interested in these markets. But I just don't really want to buy any stocks until I see how the overall greater market rolls over. I'm not a stock expert or anything like that by any means. I just kind of look at charts and, similar type of market behavior that I've seen play out in crypto time and time again. So yeah, Bitcoin's really grinding here at this support level. And obviously there's a continued sell-off and bloodbath in alts. Looking at Ethereum, there was an interesting flash crash. Did anybody happen to catch any of this flash crash by chance? is one of the reasons why I always think it's a good idea to have really low stink orders on stuff. This thing crashed on GDAX. GDAX new pairing. Obviously, what this new pairing or this new currency wasn't very liquid, but it dropped to $13. So this would have been like instant profit. Free money. What is what flash crashes are if you get fills. So anyways, looking at Bitcoin, either it's going to break down, we're going to hit that area, or it's tricking everyone and it's going to bounce really hard in everyone's face. But the thing is that December tends to be tax harvesting season, right? Which is kind of different. Like last December, everything was going parabolic, so everyone is bullish. They didn't have losses to harvest. This year, there's been a lot of losses. So, most accountants would recommend people sell and realize a loss and at the end of the year and so on and so forth. But obviously, a lot of that really kind of depends on one situation. I know that in the States, I heard they have a strange rule that you can only carry forward $3,000 loss a year if you're in capital gains. If it's business income, then obviously you can write it off. And I think Zach was saying that if you have an LLC, you can write off your losses, 100% of it, if you're trading under an LLC, right? So we could see some more tax harvesting. But on that note, let's just someone's mentioning how high shorts are going up right now. Almost looks like it's testing for an all-time high breakout. It's right up at resistance here. That'd be interesting if it broke out and spiked up to new highs. So obviously lots of shorts piling up. Some other interesting things though. Whether we break down further to the next level or whether we bounce off of current levels, we are seeing some very strong divergence, bullish divergence on many altcoin markets right now, which doesn't necessarily mean it can predict an exact bottom or anything like that, but it does show getting closer to a reversal point, right? It's just showing kind of like buying and selling momentum. Obviously, these can last for a while. So I showed you some bearish divergence on the stock market. Bitcoin has had bearish divergence and when it went parabolic. A lot of markets do, right? So you could kind of see that even though, made like lower low here, on the RSI it made higher low, right? And even though it's kind of retesting support, and actually on Bitfinex did tag a new low close to support. So this is technically a new low right here. Still a higher low. If you're tax harvesting, it is no later than December 31st to sell. Taxes are due April 15th. Yeah, so you have like till the end one has till the end of the year. And tax, with everything so correlated, tax harvesting could be as simple as like selling some stuff for a loss and then flipping it into something else that's correlated. So that I don't think that would be a wash sale since everything's so correlated. I did do some earlier this month on some of my personal stuff, but as far as like anything that I'm accumulating, I'm not like XTZ or Zcash. I'm just kind of playing a game of really at this point it's turning into how much XTZ am I going to own when this all blows over. So we'll see how it turns out. my timeline right now is 2020 to 2021. That's the timeline I'm playing in right now. And the reason why I'm playing with an extended timeline is because this can certainly drag out a lot longer. It'd be nice if it didn't, but as we saw in 2015, if it did drag out for another 11 months, if we had some sideways accumulation or whatever, in my opinion, what that would look like, let's just say we did tag 3K. Let's just entertain that possibility. And if we were to follow that exact fractal or whatever, then if we did that, then accumulation would likely end up in this zone right here. Someone's asking why flipping to other coin when realizing loss. With cost average, you can sell out a loss and rebuy the same coin. You can. I guess it depends on the tax rules. I know in some markets and some rules that might, if you buy it back immediately, it might be considered a wash sale. So I think that's like a question that's best left for an accountant, because I'm not an expert on accounting or whatnot, although I've obviously learned a lot about accounting and taxes this year. Necessity is the mother of invention, right? So if we were to follow a similar structure as 2014, then this would be the accumulation zone. Obviously, if we go lower, then we've actually broken the structure and went even lower. So, 85% drop off the top. And then you have this accumulation zone. You can kind of see there's like some support areas here. And then this accumulation zone, let's see, moving up here would be from here to here, 88%. From here to here, maybe close to 50. So if we had something like that, wouldn't be the exact same percentages, but so this would be a 85% drop off the top at 3K. Now, alternatively, so we know Bitcoin, the current crypto and Bitcoin markets do like to mess with traders in general. Alternatively, if we don't break down, I mean, when you look at the chart right now, when you look at it, it really does look like it's breaking down, right? But it doesn't break down until it actually breaks down, until it actually snaps support. So sometimes that's the risk of thinking it's breaking down before it snaps support. Kind of like we've seen multiple times where it looks like it's breaking down and then it bounces. So alternatively, obviously on the bull side of the coin, if we did hit a bounce here, I would expect it would have to be very sharp and violent. And then this would kind of create like a W pattern, double bottom pattern right here. Right, and if that were to happen, then I would anticipate it would throw a curveball and kind of produce this type of candle. If we get that kind of curveball, basically mess with, how that would look like is, let's say just messes with everyone's emotions, just, makes people short more, pile on more shorts, or maybe basically hunt some stop orders. Definitely seems like on this smaller 1 hour time frame, there's a lot of wicks and stop order hunting and some messing around here. And then basically just kind of short push the price up, which if it breaks past this level right here, I think this would be a line in the sand where we'd see some major short squeezes and probably at least come up to 55 at the very least, maybe even retest the prior. We still haven't retested prior support, right? There hasn't been a retracement to prior support yet. So we're really in the thick of the battle right now. This is really it. This is the biggest point of being in the trenches, right? Especially that this movement, the sell-off, happens after a period of, one could say, boredom, stagnation, right? Drops after periods of stagnation tend to be the worst. I mean, this is all, at the beginning of the year when we had these major drops, like for some people it's really rough. But if you were kind of like waiting for it, then this was actually fun, right? Like I actually had a lot of fun on this crash. It wasn't a big deal. This crash right here, though, a little bit more insidious because with stagnation and boredom comes, perhaps buying things to feel productive or whatever, right? Getting lulled into it, even though it's producing lower highs. And then obviously we talked about the bull trap right here. This was bull trap that came with that stagnation. Break down this descending triangle. So I did notice, though, I think I talked about this yesterday. I have noticed that the Bitcoin market in 2018 seems a lot more choppier than it used to be, right? Like we talked about this, like even with bounce plays, right? Like this was like a bounce play that only took a day, but then with this Adam and Eve double bottom, suddenly the bounce plays start to grind out a lot more, just a lot more chop, right? A lot of more of this like sideways chop. And my hypothesis is that since the launch of futures, we have a lot more high frequency algorithms, right? We have a lot more algos trading the market because I think algos generally love this kind of chop. Yeah, I heard a doorbell. Is that Chris? All right, so other than that, just generally lots of correlation, lots of red. Bitcoin breaks down, we might even see new lows on a lot of things. So it's kind of like a waiting game right now. How low can it go before we hit a bounce, before we hit a reversal, or at least a temporary bounce? Might not be the reversal, but it's pretty much just a waiting game at this point. Interesting thing over on, so it's got some bullish divergence here on a lot of coins. Interesting thing on XTZ is on the BTC chart on Bitfinex is pretty much record-breaking sell-off, right? Someone sold off a massive position here, large position of XTZ. Probably, how many was it? I think like half, 583,000 sold in one shot, probably in like a 1 hour candle. So, and then it kind of like V-bottomed and bounced very, very quickly. Maybe ICO Treasury. I mean, you never know. I would assume that stuff is being monitored, right? I think there's probably many eyes on that, and I don't, unless they're like really, really shady, I don't necessarily know if they would just market dump versus, versus like OTC, or at least like, limit orders at the very least. It kind of overall would hurt a project's bottom line. But the thing is like in these markets though, especially like with ICO markets and a lot of altcoins, you don't know who all the market participants are, right? So, some of these markets could just be literally, ICOs that raised a lot of money and printed out free tokens for themselves, just dumping on the markets. One sec, I'm going to pull up a chart, something interesting. Yeah, I can hear you loud and clear.
Cool.
Hey, Chris, you want to pull up a chart?
You can finish what you were doing, and then yeah, I was just gonna give my 2 cents and talk about kind of a few announcements, and then also um, kind of my longer term view. And I have like kind of 5 plans that I'm focused on going into 2019, and just wanted to kind of share that with you guys. So
Awesome. All right, I'll just pull up this one thing and then I'll toss it over to you.
yeah, dude. I think there was a lot of fear, and then like it kind of got pent up because the markets were closed yesterday here in the U.S. And then that's kind of like unleashing itself today.
Yeah, yeah, yeah. The Dow Jones and S&P, in my opinion, and obviously I could be wrong, and maybe this all blows over, but look very it does look very toppy to me. Like it wouldn't
Oh yeah.
surprise me at all to have a recession just because of the hyper expansion of cheap debt, cheap credit over the past 10 years, and lots of like large companies on very small profit margins expanding aggressively on cheap debt. But on a side note, on a crypto note, which tends to be the expansion and contraction of the markets that happens every 7 to 10 years or whatnot. But looking at this is a chart I want to show. It's basically like ETH ICO treasuries from ICOs. So you can see that even though dollar wise, with Ethereum being the lowest, you can see that as far as units of Ethereum, we've had the most Ethereum sold from treasuries. So a lot of this capitulation, and I wrote a market report about this in the fall of last year, of how I believe that the ICO boom was kind of inflating the price of Ethereum, and that naturally it would probably unravel as some of these ICOs kind of capitulate their Ethereum. And just because a tech nerd or an entrepreneur raises millions of dollars doesn't necessarily mean that they're immune from the same market emotions as just any regular retail trader or investor, right? They have the same emotions, and the fact that the majority of them have sold the most ETH at the lows obviously shows that they're in with the same kind of markets emotional cycles as any other normal investor, right? And that in fact a lot of ICOs last year were launched by people who were completely new to crypto. This is why it got out of control, is you had like a lot of noobs who came in, and instead of like learning the ropes and doing whatever, they're like, oh, I'm just going to get rich instantly. I'll just do an ICO. Yeah, give me $50 million for this white paper. Right. And obviously, this year we're seeing a lot of cleanup, obviously, at the SEC and some of these unraveling and such. So this is basically a chart I want to show. And I believe this is what's also been creating a lot of selling pressure on Ethereum, that it did hit double digits today. And anything that obviously goes up from $7 to $1,500 in 1 year is not sustainable and has to unravel a bit. And so this is kind of the nature of crypto in general, right? High risk to the downside when things get too extreme on the upside, and then things get too extreme on the downside, then there's a possibility of high reward on the flip side in the next cycle. So anyways, this is just one chart I wanted to share, and I will pass it over to you, Chris.
Just kind of cycling through BTC charts. Cool. All right, Rock, you good?
Yeah, good
Cool.
to go.
Okay. Cool. So yeah, guys, I just wanted to give you like obviously my kind of intraday perspective, but also a couple of announcements, and then give you kind of my 5 plans. I've been, spending a lot of time thinking about 2019 and kind of what I'm preparing for, what I think the markets are going to do. And so I just want to kind of give you like my, I guess, 1 to 3 year outlook and kind of plan of action for what I'm going to do. So just kind of, again, like zooming out and thinking of the bigger picture. Obviously right now, market sentiment is like the most fearful that I've felt it since 2014. And for those of you that have that were with us in 2014, you've been here before. This is nothing new. If you haven't, you might be going, oh my God, is the death spiral real? Is crypto dying? And, is Jamie Dimon ultimately going to be right? But, whenever you have a bubble and whenever you have a full market cycle, this is very, very common. And I was actually running some data. So I wanted to show you guys some stuff. Going back to 2012, and I was just running some like market cycle. Yeah, exactly, Jose. Yeah, he's buying. So going back to 2012, which is really where we had the first, I guess you could call this like kind of boom and bust. It was really, it was such small dollar volume that it's really hard to make sense of it. But you can see what happened is, this is Bitstamp, which I believe is the longest data feed that I can get on TradingView. If you guys know any other exchanges on here that has like 2011 data, let me know. But I usually, on my watch list, I just watch kind of Bitstamp, Coinbase, and then Bitfinex. And ultimately, you just want to use the markets that are trading like the most volume. So if you use something else and it trades a lot of volume, that's fine. Nicolay, Brave New Coin, Liquid Indexes data. Okay, cool. Well, so for the purpose of like this, this analysis, we really only need to go back to here. There was a boom and bust in 2011, but it was like so insignificant on a dollar volume traded that it doesn't really matter to me. But you can see this is really kind of the first like little pattern that we have. And this was really like a 3 to 6 month cycle. And then what happened here, so this was the first bubble in 2013 where price went from like $20 to $250 and then pulled back to like 50 or 60. And you can see this one lasted about 6 to 9 months, depending on, so like I measured it from like basically the start of phase one, accumulation to where it like ramps up. And then like you can either end it on this pivot low or end it where this starts to ramp up. But basically the first bubble here, so it went from like a 3 to 6 month cycle to a 6 to 9 month cycle. And then the boom and bust in late 2013, which went up, pretty significant, just under 1,000%. And then this crashed back about 87%, where the first one was also initially about like an 85% pullback. But what was different on this cycle is it went from like a 6 to 9 month cycle to like somewhere between 15 to 24 months, depending on, again, on like where you count accumulation to start. And then that was basically like 2.5 times the prior cycle's time, right? So whenever we look at the next cycle from there, so last year's cycle, I kind of count that either from the second bottom in 2015 or where we broke the new all-time high. And if this cycle is similar to where, it was basically growing at about 2 to 2.5 times the prior cycle's time range. And again, this isn't perfect and the market doesn't have to do this, but this is just kind of based on the data we have, kind of what I was running. Then this full cycle could last about 60 months from accumulation to phase 2, 3, 4, and 5. If it's going to be the same kind of 2.5 range. And so when I ran those numbers, it looks like that could actually push us out into like mid 2020, where at that point, what do you guys know that happens in mid 2020? I think it's, what is it, April or May? You guys remember? Yeah, the halving, right? So if that lines up, let's say we get capitulation, we start to ramp back up, or it's kind of a slow bleed, that could basically lead us into the next major cycle around the halving. Now, obviously, there's a lot of variables that come into play there. And when it comes to like timing the markets, these are very rarely, if ever, like dead on the money accurate. But that just kind of made sense to me. Like, okay, well, if we're going to do 2.5 times the prior cycle, that could push us out as far as 2020. Now, if we do that, that's kind of on the long side. So 2.5 times 15 months is 37 months. So that would push us about 1,100 days. So that's pretty close to where we are now, 11 or 1,200 days. So somewhere inside of kind of this yellow range is where I would expect true accumulation to kick in, to go back into phase one. And now that could look like a couple of things. There's a couple of ways that that could play out. So if we look at like the first 2013 bubble, you can see where things were the ugliest right here after, you know, kind of that first spike was the deepest pullback, but that was about a 75% pullback. And then that turned out to be the bottom, and then it accumulated and ramped up from there. So it could either be, it could be one of three types of bottoms. It's either going to be like a V bottom like this, or you could see like in 2014 where it was a slow bleed through 2014. And then we had that final capitulation that established a low, call it at 150. It was like really like 160 or something, but call it 150, which was an 85% pullback. And then we had about a year of accumulation, right? So you could either start accumulation on this pivot low, or where it started to ramp up here in the August timeframe. So it's either going to be one of those two, or a third possibility, which I'll talk about in a second. But let's map out what this could look like. So basically, we get a panic, right? So we had the break of the hope line that we call it. We get down to the first area of 4K. We talked about the next major area is 2K if this 4,000 level can't hold up. So let's say we get, you know, a spike down into 2K, and then let's say it's like an early 2013 type play, and then we get a V bottom. Or let's say that buyers are able to defend this level and we get some kind of V bottom here, and then we accumulate closer to 6K, right? So basically somewhere inside of this, and again, like whenever we're running these fib extensions and these major market zones, you don't know where that pivot low is going to be until the price action starts to play out. What I mean by that is, like, if we go into a daily chart, like let's say that we get a 1, 2, 3, 4 breakdown here, like you don't know if you're going to get buy support at 3K or at 2,500 or 2K. That's why when you do get a break, I typically go down, I work off of like the daily and then the 1 hour. So like if we look at the 1 hour, and let's say like intraday, you start to get, I'll bring volume. Let's say you start to get like big volume spikes, and it starts to like really panic through this level. That's where I start to pay closer attention, right? So I pay more attention to the market at like key inflection points or key breakout or breakdown points than I do, you know, like when Bitcoin was just like consolidating around here. Like I wasn't really watching price too closely. I just set alerts, let it work, and then, you know, whatever happens. It's whenever the market starts to break through key zones that I really start to pay attention. And so the only way that you can really play it is like you map out the most high probability zones based on the information that you have, right? You use measured moves, you use Fibonacci, you use prior support and resistance, right? We use the tools we have, we come up with a hypothesis, and then you watch price action. And so what I would look for is like either a V bottom off of a panic, right? Or, you know, and I don't necessarily like to go heavy. I'm more conservative and I like to accumulate through time. So let's say that turns into like a 2015 type scenario where we do get a bottom, but it's not, you know, you do get like a V bottom intraday, but you don't know if that's the low, right? You don't know until after the fact when you start to see that accumulation. right? So that's really what I would be looking for, either, 4K or 37, basically this area to defend if buyers can hold up and get like a double bottom here, or if we get another spike and a fib down into the 2K to 2,500 zone, right? If we get like a washout of that price level, that would be about a 30% move, right? So say that happened over the course of like 24 to 72 hours, get an aggressive like bounce play. As you can see, I mean, on this panic to this level, we did get a bounce. So from the lows, what was that? About 20, call it 25%. So it wasn't that great. And I think the reason why is because there's just, as Rocky's been talking about, there's a lot of fear in the markets. There's a lot of ICOs now that are like trying to decide like, okay, do we liquidate? Do we hang on? And so I wouldn't be surprised to see another washout. And if that happens and we get some kind of aggressive move down to that next level, I would give that opportunity, that dip opportunity, a chance as well. But what I wouldn't do is like say, okay, this has to be the low. What I do is whenever I buy a panic dip, I usually sell like around half of the position into the first bounce, which is usually anywhere in between like 20 to 50%, and then adjust stops. And then if that does hold the low, then you can like hold the position. If it rolls over and sellers just start hitting the bid, then, you minimize risk that way. And then I like to kind of slowly move into longer term positions once accumulation is kind of confirmed, right? So that's just kind of like my risk tolerance. I know some people are more aggressive. Rocky likes to really size in quicker on dips. I just really am more conservative. So that's just, we kind of like to point out the difference in trading styles that you can have. I had some buys around 4,200. But I still have a lot of dry powder left for another washout or accumulation. Because here's the thing, yes, we could V bottom bounce like the first boom and bust pattern in 2013. And if that happens, I won't be sized in as big, right? So my reward is lower, my potential reward is lower, but also because my size is smaller compared to what my full accumulation would be, my risk is also lower. So you're either more aggressive and you go higher risk, higher reward, or you're more conservative and you're slower and you go lower risk, but potentially lower reward, right? You just have to choose what's comfortable for you, right? So for me, especially after like a snap of support, I just like to be a little slower, kind of pay attention, watch these key levels. And then, just looking at the time horizon, like there's a very real possibility that this could take time to go back into the next cycle. And as much as I wish I could like just force my will on the market and say, yeah, guys, tomorrow or by the end of the month or quarter, we're going to be at 25K. Like you have to plan for all potential outcomes, right? And I'm still very, very bullish on the future of crypto. And having been through so many of these boom bust cycles, like I don't really have any emotional attachment to price. My biggest thing is I just want to help people like understand both sides of the coin and like what the potentials are, right? So we talked about two of them, one being a V bottom bounce like we saw in early 2013, the second being a bounce, but then like longer term accumulation. And then the third one, which we talked about, I think a week or two ago in the update, was kind of the black swan event, where either there's some kind of flippening, right, where like another crypto takes over as number one market cap, and then Bitcoin kind of slowly loses favor, in which case it would make sense to, liquidate maybe some long-term Bitcoin holdings into whatever becomes the dominant coin. Or there could be like a bullish black swan event, like there's something that fundamentally happens with the global financial system or a big fiat currency, something like that, right? So that's what I would also look for, is like, say we start to show accumulation, but then like for whatever reason, Bitcoin just doesn't catch bids, meaning like nobody's like accumulating or buying, which I don't think is the case, but I don't want to eliminate that out of the realm of possibility, right? Because if that starts to happen and you're in denial and you're like, okay, well, we're starting to see like a slow grind, then I think the worst thing to do is go, okay, well, I'm just gonna like, hodl and not pay attention to what other information is showing me, right? Like it could be another coin, it could be just something fundamental, or with economics of the global financial system, right? We have to kind of take that as it comes. So those are really the three potentials. So my play for next year, I really have 5 like areas of focus, and next week we're gonna actually do a special class and make some pretty big announcements. Basically, the long and short of it is we're gonna start incorporating some stock market stuff. I know you guys that were in Cayman really enjoyed Travis's talk, and just learning how to either value invest for the long term or find kind of swing trade opportunities. And I'm actually really starting to lick my chops in the equities markets right now, because we're at such a kind of inflection point here on the S&P 500 that I see potential for really big volatility. I was running some measured moves and just some kind of future scenarios. And look, I'm not like a doom and gloomer, but I was looking at some downside potentials. I was looking at some like short squeeze potentials. And I just think that next year, my prediction is that we're going to see higher levels of volatility in the stock market. For the past 10 years, stock market volatility and trading volume has been falling year over year. Like you can see it in the volume down here. You can see it in just volatility metrics. Like volatility in the stock market has been falling for almost a decade. But now, because, of like where things are valued at, where the fear indexes are, I'm just really getting excited thinking that we're going to see even more volatility in equities next year. So I'm starting to prepare and allocate capital there. So that's one plan. The other plan is, actually 3 of the plans are crypto related. So when it comes to Bitcoin and accumulation, like I said, I'm more slow to accumulate because I like a lower risk. I'm just a lower risk profile. That's all. When it comes to like trading altcoins, my focus next year, and I've been talking about this for months, I'm more excited about STOs, security tokens, and I posted the interview yesterday with Harbor. Did anybody listen to that, by the way? Did you guys see that? A few of you? Yeah, I guess some people couldn't access it. I don't know why. I think it was hosted on iTunes. I don't know if Pomp has it hosted it anywhere else. But the gist of it is, guys, is Harbor is a company that is making the process of listing and trading security tokens a lot easier. And I think that, so kind of prediction number 2 is that's going to be the next big wave in crypto, is these hard assets. And one thing I thought was interesting is Harbor was saying that they think that 75% of their securities, at least what it looks like today, is going to be real estate related. So that is actually pretty interesting because real estate is a hard asset, right? It's backed by something tangible, which I really, really like from a risk perspective. And I think while they may not be as volatile as kind of the ICO boom of last year, I do think we're going to see things like liquidity premiums, and we are going to see like price discovery. So I'm excited for trading and investing in that niche of the crypto space. Now, that's one thing that I don't think it's going to be like, oh my God, you just have to like rush into it. So Demi, it's more like private equity, but on the blockchain and traded on an exchange. it's like basically a new asset class. So another example of that is like angel investments and venture capital and private equity. Like for example, a company I invested in recently, they just raised another $47 million round. And so I had some dilution. But my overall dollar value of my equity in this private company is close to double or triple what it was from like 24 months ago. So what would be really nice is if I could scale out of some of that position on a tokenized equities platform, right? Like that would be super cool if I could like, make angel investments or private investments and then at some point like pull out my cost basis and maybe even trade these private companies. So like that's something that I'm super excited about. And I think next year is going to be the year for that. No, Harbor is not traded on a stock exchange. I believe it's a private company. But yeah, I'm actually, so what they did recently is they launched a $20 million raise for student housing in South Carolina. That was kind of their first project. And I think they have a lot more stuff in the pipeline. So as I go through that process and, I didn't want to invest in the first project because I kind of wanted to watch and see how the process worked. But as they release more and more deals, like I'm probably going to jump on some of those and I'll document my journey with that and show you what I'm doing. Yeah. Yeah. So basically, Mark, what they're doing is they're creating tokens for these projects. So like ideally and the cool thing is they might even create ETFs for types of projects. Like for example, in the interview he was talking about yesterday, you might be able to buy or short like Manhattan real estate, like A-level real estate in Manhattan, or you might like be able to speculate like on the Amazon thing. You might go, oh, well, I think Amazon's going to Dallas, so I'm going to buy a fund of downtown Dallas real estate. So, stuff like that like we've just never been able to do before. It's really like opening a whole new market. So it's tied in through STO ownership to the legacy. Yeah. And I mean, it's more evolutionary than revolutionary. Like it's still like you're just buying part of a real estate deal, right? But the difference is it's actually tokenized. And so it's going to be easier to trade it on these exchanges. What about the huge developments in the space and on the fundamental? How could that shorten the next cycle hypothesis? Yeah, exactly. I mean, and that's why I say, like, I think the accumulation could happen anywhere from where we are now, just based on the time of the prior cycles. Like if it stays in line with that type of growth, the one kind of caveat. So, last week we talked a little bit about like who are the market participants today versus like the last bubbles. Like this last boom and bust cycle, to me, it hit the mainstream, right? Like it was on CNBC, but like Rocky said, like I don't think we've hit market saturation or mass user adoption. What happened was a speculation just got way, way ahead of actual use. So it takes time for that to unwind, right? So as it unwinds and people panic and they sell the lows, that's where the lower it gets, the more aggressive I start to get. And just looking at, like the last cycles, how they each had like 75 to 90% pullbacks. If you look at that, 80% is basically where we are now. 85 is closer to 2,500, right? So somewhere inside of kind of this accumulation range and kind of that time zone, right? Now, again, there are fundamental factors that could completely speed things up or slow things down. And that's why, like, instead of placing time limits on when I'm going to place trades, I focus more on market structure areas and then look at fundamental news as it comes out and then say, does this change my hypothesis about what I think is happening? Right? So like in late 2014, there was like just a ton of negativity. There was a ton of negative news. And then it was kind of like a slow rollover in 2015, right? We saw more and more fundamental stuff with the NASDAQ and with funds. And Rocky and I had several conversations. Rocky, you remember we were like, hey man, like people are like quietly accumulating this. Like this isn't like some death spiral. Like banks are getting in, you know, the first hedge funds were jumping in. You remember that, Rock, through like early 2015?
Yeah, no, absolutely. Like New York Stock Exchange investing in Coinbase was my first like green light signal that accumulation was happening, and that happened a week after the first capitulation down to 166. So to me, I took that as like a big signal. And what I found amazing was that even on that news, market sentiment was so in the gutter and people were so negative and like, it's dying or whatever, that I was just, to me, it just seemed like insanity. I was like, holy crap. Like this is like people don't even realize how big this damn news is. Now we're seeing like multiple years after the fact just how big that news is, because NASDAQ and New York Stock Exchange are building crypto products and will be trading Bitcoin. Actually, something else I pointed out yesterday, which I thought was very interesting, is that in the highs, when the markets were exaggerated to the upside, we had cash settled futures. And cash settled futures are great for shorting because it's settled in cash, right? And now at the lows, it's almost like these financial institutions are creating products for themselves first and foremost. Now that the markets are exaggerated to the lows, now they're introducing one-day contracts settled in Bitcoin settled futures, which are perfect for accumulation. Right? So if like financial institutions at the lows want to accumulate Bitcoin for, let's say, the next run or whatever, the backed futures product, and I think NASDAQ is leaning towards that as well, Bitcoin settled. They said they wanted to do something different than CME, and I know they compete toe-to-toe with the New York Stock Exchange. Yeah. So we don't know for sure exactly what the futures that NASDAQ's going to produce are going to look like. But we do know that back there, like one-day settlement settled in Bitcoin and insured, right? Like they're going to have custodial services for holding Bitcoin for people that'll be fully insured. And this is actually a very, very large milestone for crypto because we haven't had any insured crypto yet. So this is like, when you look at the risk profile of like portfolio managers or whatever, obviously like they don't want to manage private keys or anything like that. They don't want to touch that stuff, right? Because there's so many like security risks. Yeah. But to be like, I could just, diversify 1% of this portfolio into Bitcoin, and it's New York Stock Exchange, they're looking after it for me. They're dealing with that through Backed, and it's fully insured. So if there's a hack or whatever, it's not going to go to zero. This is like the first time in crypto history that we've had any insured crypto. Now, it doesn't, all of this is I think good products that fit well for the average retail investor. Obviously for like the cypherpunks and the crypto nerds or, crypto anarchists or whatever, they're going to always want to have their own private keys and blah, blah. And that's fine. I feel like there's basically being something created for everybody, right? Mm-hmm. And I think that the majority, probably like 98% of the world's population is probably going to prefer some custodial service that's fully insured versus having to manage all that stuff themselves. The average person is not ready to manage their own private keys, nor would I even recommend it, because if people like can't even secure their email, then the chance of loss is really high from hackers and such, right? So I kind of find that an interesting observation, that at the lows, you get Bitcoin settled, and at the highs you get cash settled. So that's an interesting little flip on the switch there.
It is. Yeah. I mean, they know what they're doing. And one thing, just kind of briefly talking about like, different ways to get into crypto, like for your average person, like a really good use case is like gold, right? Early 2000s, gold ETFs started coming out, gave people a way to participate, and, had like a 6-year bull run. So when the ETFs come out, that would, in my mind, like I use the word black swan, but it's something that we know is a possibility. We just don't know when, right? Mm-hmm. So like, and I know there's articles that have come out this week that are like, basically saying like, don't hold your breath, I think was the title for one of them. Like, people can speculate all they want, but we just don't know. So that would be like a bullish black swan event, right? And there's several things like that with like institutional custody. The easier it becomes for big money to get in and be able to legally hold these coins in like, pension funds or just institutional level accounts, like that's where big money starts to accumulate.
Yeah.
And like, I don't know anybody that manages pension funds and stuff like that. So I can't really tell you what they're doing, but I know other people in the crypto sphere have been talking about that. And it's, to me, that's kind of the next evolution, right? That's the next frontier. We had like a big, like speculative play last year. This year is fear, next year, maybe more stabilization and actual real development, and then more securities coming online. That's kind of what I see, right? Is a balance from extreme greed to extreme fear, back to equilibrium, new markets, more development, more access. And then that will lead to the next cycle. That's kind of what I think is going to happen.
Yeah, and generally the good news with these market cycles, especially as liquidity increases and more market participants, is that once you get out of the accumulation, you go into the slow growth bull run, the slow growth phase, where you can do the multi-year holds. Obviously there's still FUD and shakeouts and this and that along the way, because even 2016 was a bumpy ride on the bleeding edge, and in 2017, so on and so forth. But in that sense, it makes it easier to manage things when you do have a slow growth bull market, because you can park money for long periods of time without having to overthink things. And that was one of the benefits that I found with 2015 and 2016, was just to be able to try to accumulate as much Bitcoin as I could and just hold it and not have to have like these big decisions. Whereas like when things go parabolic and then you're going into bear trends, suddenly you got to make really big decisions. You got to be like, all right, well now I got to hedge, I got to put money off the exchanges, I got to put money in the bank, all these big things. So it's obviously, for the hardcore hodlers, that they'll probably hold through thick and thin. And some of those guys have been holding since like 2011 anyway, so it's all gravy to them.
Yeah.
Right. Whether it's at 20K or 3K, if you bought it at 5 cents, it's all gravy, right?
Yep.
So that's one of the benefits to these market cycles. And the average retail investor doesn't really manage their own portfolios anyways. So the average retail investor, just retirement accounts, or there's a huge industry around managing all of that. So that's where I think I personally believe the next wave of money will come in. And obviously I'm not the only one who thinks that. I'm just, I base my hypothesis not necessarily following the talk of the media or whatever, whether they're FUDing or FOMOing or whatever. I base that just on the actions of, the largest exchanges in the world putting their money where their mouth is. I mean, NASDAQ, recently in an interview this week, said, we don't give a crap about the price being low. We've already committed a ton of time and money towards this, and we're launching and going forward with this hell or high water, and we've believed in crypto for a while now, right? Like they've been eyeing and looking at it since 2015, right? So obviously, these people in this category, obviously we could say they're in the smart money. Their money's so smart that they're selling the picks and shovels.
Yep.
Right? Like they're literally selling the picks and shovels. And they have been looking, I remember they have been looking at Bitcoin since 2015 when the liquidity and volume was garbage and the market cap was peanuts. So that's how much foresight they had in all of this.
Yeah.
So now, even though we're in a bear trend, I mean, the market cap's still $63 billion. We're still pushing 6 billion in volume. And there's still a lot of growth potential based on straight up supply and demand dynamics. So as a, obviously as a longer term investor, I am bullish. I'm still bullish about crypto. That's why I'm actually, even at these lows, and even though everything seems chaotic and scary and stuff, I feel kind of excited about accumulating crypto. I enjoy the process of getting back into crypto again, and I've kind of been eagerly waiting for that. So and that's where I started, right? I started from crypto, and to crypto I shall return. And maybe, I don't know, maybe once we have one other massive bull cycle, I think maybe that might be the last one. Who knows? Or maybe it turns into a stock market. Who knows, right? Where we think it's going to end and then it goes on for like 100 years. Who knows?
Yeah. Yeah. I mean, I tweeted a chart of Apple, which basically had like, they almost went broke back in the 90s, and they had a big boom bust pattern. It was like a 90-something% retrace and then went to become what it is today. Right. So whenever I think about like long-term price action, like I really, really, like my emotions aren't that affected by price action. Like outside of extreme moments, like right when price was going parabolic through here, like we were like, oh crap,
Yeah.
because we know like what follows that, right? And then like on the extreme panics, right? We know what the sentiment is. We know what most people are feeling. But you got to try not to play into it, right? This is where like discipline comes in, and like really just getting your mind right, and like, rethinking about like all those cliches, like buy when people are scared, sell when they're greedy. Like all of those things are nice, and everybody's a genius and happy during a bull market. It's the bear market that really tests your fortitude, right?
Yeah, and then it always looks easy in hindsight, like, oh yeah, of course, you just buy low, sell high. What's there to think about, right? And then you look at market sentiment now, and it's the craziest thing. It's just really the craziest thing, because like people were just drooling and in love, like all hell Lord Vitalik when Ethereum was at $1,400.
Yeah.
They're willing to sell their damn house to buy Ethereum at $1,400. But, knock a couple zeros off that price, and suddenly it's like nobody wants it anymore. It's going to zero. It's dead.
Kavorka says, in terms of market sentiment, do you think the crash from 20K needs to become a distant enough memory for a new cycle to begin? Yeah, so that's the thing, right? And that's why, like, when you get on the backside of phase 3, highs get sold into, right? Because you do have those bag holders. You have people that chased up here that just kind of have that mentality of like, okay, any kind of pop, like hopefully I can like get some money back and then sell into that. Or they sell on panic breakdowns too. So what happens is, and typically where markets actually capitulate is where a majority of those people have sold, and then you need a new round of money, because what happens is speculators like this, people that chase the highs, they end up losing, right? They're salty, and then they either see the light and come back later, or they call it a scam and they never come back. Right. And then you need a new wave of capital. And this is what makes Bitcoin and crypto in general so interesting, is that it's a global market with really, really low barriers to entry. Like anybody around the globe can buy Bitcoin. Right now, if you're trying to buy from an exchange, and you're trying to trade size, like you either need to do KYC and or go through an OTC dealer, right? Or like you could buy it from your friend and participate in so many different ways. So that's the first time in human history we've had something like that. So every time I've thought, like, I underestimated this bull market, by the way. Like, I actually started selling a pretty significant percentage of like my 2015 buys around like 5K, like here through, like, you know, we were like obviously like active through the trend, but like if you look at this, like this could have been phase three, like this parabolic move. And I'm like, dude, I don't know if we're going to make it to 10K. That's crazy. That's like, you know, it was like a 2000% move from the lows of 15. But, you know, this is why you don't underestimate the irrationality of people, because that's what this price action is. It basically just demonstrates the emotion and the actions that people took and what they experienced, right? So that's what's interesting about Bitcoin, to answer your question directly, is like, yes, in theory, like you do need time to clean out the emotional I'm gonna call them speculators. You need time to wash those out. You need time to flush out any weak holders, and then that's where capitulation happens once you have everybody that's done selling. Now, one other kind of fundamental thing that we have right now that was not present in 2014 and 15 is all of these ICOs that raised all of this money, right? And I think, because we saw, what was it, this week or last week, ETC came out, the ETC dev team came out and said they're calling it quits because they ran out of capital.
Yeah.
I think we're going to see a lot more of that over the next year. And then the question is, okay, are those people, are those failed, basically what they are is failed startups that raised venture capital. That's what they really are. They just raised it through like tokens. When those companies fail, what are they going to do? Are they going to dump on the market? Because at that point, then they become speculators. That's one thing I've been thinking about that I'm not quite sure. Rock, do you have any opinion on that? Or
I think the next wave, once these institutional accumulation products are launched, I think the next wave is going to be from all the big money that was actually sitting on the sidelines watching the last bubble and didn't get in on it because they didn't have the right investment vehicles to do so. Yeah. And I think that's where we're going to start to see a much bigger push coming from, which is actually a pool of liquidity that's even way bigger than what we've seen. That's my opinion. So I think it could. I don't think it's going to be crypto Twitter bag holders that are going to do it. Mm-hmm. I think a lot of them are, you know, out of dry powder and just wrecked or capitulated or whatnot. I think it's going to be a lot of the bigger players that have lots of money who are just looking for alpha. They're looking for some profit and high profit margins and a new emerging market. And once they have something that they can easily buy that's fully insured, that eliminates a huge part of the downside, because that insurance component, in my opinion, is huge. Because, I mean, without that, if something goes wrong, you basically, your investment goes to absolute zero. Yep. Right? Like, imagine putting $1 billion, pouring in $1 billion or creating $1 billion fund or something, and then oops, you know, we lost the private keys or whatever, and now it's worth $0. Like there's, I mean, and stocks can bleed out and stocks can go bankrupt and go to zero and whatever, but it's usually not just an instant process of, oh, you've lost your private keys, it's zero. Like literally in one day you could have your portfolio could be worth $1 billion and next day you lose your keys, it's zero.
Yeah, isn't that crazy?
It is, right? It doesn't matter what charts or fundamentals or any analysis someone tries to pull off if they mess up that security component. So that's a massive risk that I'm sure that is a bigger risk that's beyond the appetite of most people. And obviously they can you know, hire the right team and developers and so on and so forth, but now suddenly they have to trust these employees to manage that $1 billion, all the keys and securities in their hands if they don't know that element. So in my opinion, when I saw that, you know, Bakkt was going to be fully insured, I saw that as actually a very, very bullish thing, because suddenly it completely eliminates a big component of the downside risk. Now, there's the volatility in the market, downside risk, and all that stuff. But obviously, these institutions and funds and stuff, is the part of the game, right? That's the game we all play, right?
Yep.
And
yep.
that's fine. There could be profit made in that volatility and even on the downside. So I find that component is very big. And there's been so much. The crazy thing in this bear market is on a fundamental note, when we're just talking about the technology, like from a development standpoint, whether it be a Bitcoin or other projects, or if we're just looking at the industry as a whole, we've been getting hammered with bullish fundamental news after bullish fundamental news pretty much for months, one after the other, boom, boom, boom. And the market's just been responding with bearishness. And again, it just kind of reminds me of like 2015 where you know, we started to see, if you look at a lot of the news, we start to see a lot of bullish news because in 2014 we didn't have all these like large players interested in Bitcoin. Like it was basically very niche amongst crypto nerds. And then in 2015 we start to see a lot of large players and so on and so forth coming out of the woodwork, talking about blockchain and crypto and blah blah blah. And suddenly like, okay, this market is headed towards the mainstream, right?
Yeah.
And that was an important metric for me, because as long as it stayed super fringe and niche, you know, the chance of hitting those market saturation levels was really low. But as much as we, on a philosophical level, whether we love or hate it, whether we want to stay crypto anarchists or whatever, I mean, I think the reality is that you have a blend of both realities. Reality is if you hit the mainstream, you gotta do business with the regulators, you gotta do business with the banks, you gotta do business with everybody, right? But you're still gonna have those cypherpunk roots. You're still gonna have, you know, anonymous anarchist developers who are coding away and creating stuff for people's privacy and freedom and all that stuff. So it's like a merge and a mix, and that's what mainstream regular society is all about, right? And just like the internet, right? The internet started off as something very kind of fringe and niche, and you know, a bunch of hackers playing around and so on and so forth. And now it's, you know, the biggest companies in the world are internet companies, right? Yeah. Software companies are the biggest. They've replaced like big oil and other huge companies from like 10 years ago. So now like
tech is now huge. Like, I forget, I want to say 17% of market cap. But yeah, it's definitely, it's crazy to see how big shifts can happen in relatively short periods of time. And, you know, like you were saying, Rock, in 2014, when negative news would come out, because you're in a bear market, the market would respond accordingly, right? But as soon as the momentum shifts, it was like, you know, through 2016 wasn't exactly peachy. There was a lot of negative stuff that was coming out, you know, like the Bitfinex hack and all that. But the difference is when you have that bullish pressure, when you have that momentum, the market shakes off negative news, you know, and it just kept trucking despite that, right? So like here, like obviously when we're in the downtrend, any negative news, expect panic selling. Once the momentum finally does hit equilibrium and then roll over, I think the opposite's going to be true.
Yeah, and we just haven't responded to any of the positive news coming up, right? And to me, Backed is just as good as an ETF, right? To me, an ETF is it has like that magical golden swan bullish sentiment to it, but it effectively serves the exact same bloody purpose, right? Yeah, like if you want to buy Bitcoin through you know, institution, you could do it through Back, or if we had an ETF, you do it through the ETF, but the end result is the same. You end up owning some Bitcoin. Right? So
yeah. So let's do this, guys. Do you want to hear my plan for next year? I basically have 5 things that I've kind of listed out, and that I'm really going to focus on. And this is kind of where you know, these are based on some assumptions, and things could change, but this is what I'm going to do going into next year. Okay. So number 1 is I'm going to focus on market sentiment and slowly accumulate based on my projections in this chart. So basically below. So, again, I've started to accumulate a little at 4,200. If we V bottom and start to accumulate there, I'll add in. I won't be heavy at the low. If we wash out and we get down into the 2K range and we have, another like secondary push like we saw here, I'll add in on that and probably like try to mix that up, a little bit of trading, a little bit of longer term hold. That's just kind of my focus. And then depending on how that plays out, we talked about the 3 kind of accumulation possibilities. That's how I'll size in. Okay. So I've still got a lot of dry powder. That's just me. I know some people are more aggressive. Some people are more conservative than me. We're not here to tell you what to do. It's just do what fits your risk profile and your trading capital, right? Number 2, I'm going to pay close attention to STOs and start investing and trading those ASAP. And I saw a question earlier about, accredited investors and stuff like that. There is going to be a part of that is for accredited investors, at least as it is today. It all depends on how the company raises their capital. There's different, Reg D, Reg CF, Reg A. There's different ways that companies can raise money. And it depends on, so we don't have to like reinvent the wheel for like on the regulatory side. I think that's going to be pretty similar. And I believe, don't quote me on this, but I believe that after lockup periods, non-accredited people are going to get more access to those. So I'll let you guys know, like as soon as I get into this. This is still like super, super early. And I wanted to watch Harbor's first investment, which they kind of successfully launched, and they're raising money and they're doing business. So now I'm taking the next step, and I'm actually going to put some of my risk capital into play into these projects. Okay. So the third thing is I'm going to continue to stay away from new ICOs, just due to the risk of non-regulated markets, especially with all the implosions and all that stuff. 2017. And let me finish this sentence. So continue to stay away from new ICOs and not overtrade existing altcoins. Okay. So here's what happens. You go through market cycles where there's a time where you want to press the gas and you want to take like every trade that presents itself. And there's other times where you go, you know what? The best trade is no trade. And with altcoins right now, I feel like the best trade is kind of like what Rocky said, like be very selective. And if you do get in a position, think of it as an accumulation play and use risk management like you would venture capital. Only put in money that you're willing to lose 100% of that position, right? And we've talked about this in the boot camp and in classes for years, the difference in mindset and the difference in risk management between like a disciplined, planned out swing trade or even like a day trade where you just plan it, you know your entry, you know your target, you set risk, you get in, you get out, boom, done, very clean, right? There's a big difference between that and long-term accumulation plays on new or early cryptos, right? Be it a token, be it a cryptocurrency, a crypto asset, whatever, it doesn't matter. If you're getting in early, just know that 90% of cryptos are probably going to zero. So position accordingly. B, we can't force our will on these like timelines, right? Like for the first, what was it, Rock? Like 6 to 12 months, like Ethereum was just like a slow bleed and didn't really do much.
Yeah, the first year in 2015, like initially when it hit Poloniex, it dropped about 80%. And then it just kind of like chopped around with some sideways leading into like 2016. And then eventually it had its first market cycle and bull trend when it went from like, 40 cents to $26 or something like that. And that was his first kind of boom bust cycle. And then it crashed from 26 down to 7. And then it had an epic boom bust cycle last year. And so on.
Yeah, even before the first boom bust, it was just like super, super slow. And we were like, okay, well, is this thing going to go to zero? Like, I didn't do the Ethereum ICO. I was just kind of watching it, and then like started trading around $1, I think $1.50. So that's kind of just my philosophy. Like, when all ships are rising and there's a lot of capital flowing into altcoins, okay, great. Let's press the gas. When things are deflating, I kind of pull back, right? Slam on the brakes and basically size to where like, hey, if any one position goes bust, it's not going to change my life at all, my quality of life, right? That's why it's really called risk capital. Like, you have to be comfortable with that. It basically, you have to assume that you're like a venture capitalist or you're an early stage angel investor. Guys, it is the exact same thing. You're making early bets in companies. And the only difference is this is done through tokens, where traditional angel rounds are done with like paper and Excel spreadsheets, So like, when it comes to the fundraising part, obviously I know the tech is different, and like some are cryptocurrencies, some have utility, right? Like, they're different types of assets, but the mindset and the risk management behind those plays is the same as venture investments. Does that make sense, guys? Is everybody clear on that? I know we've been like talking about that for years, but for anybody that's relatively new, I just want to make sure you understand like at least our mindset and really the reality behind like what all these thousands of cryptos are and the right way to think about it from a risk perspective. Cool. Okay, so that's kind of the third step of what I'm doing next year. Yeah, exactly. So number 4, so this is where I start to get even more excited, is I'm actually stepping up and not really filling a role, but playing a bigger part in a venture capital firm that I'm a founding partner in. So more active venture capital investments. And what this means is twofold. A, I'm going to be working with entrepreneurs in our community to help them get funding from my VC network. Okay, so my venture capital network is called NextGen, and it's a nationwide network here in the US. I haven't really talked about it much, but starting next year, I'm stepping up and playing a more active role where I'm going to be helping entrepreneurs get funding. So we're going to, be doing raises anywhere from, on the small side, a couple of million up to like 10 million. And we recently, NextGen, it has launched a new fund of $50 million. So far, I think about 35 million has been raised, and they're going to close the round with a cap of 60 million early next year. And so they have a lot of capital to deploy, and I am financially incentivized and just like highly freaking motivated because I love entrepreneurship to help you guys that are developing this, learn what VCs look for to fund projects. And if it's a fit, make introductions and bring you in to do pitches to our community of investors. And we have offices in Austin, DC, Boston, West Coast, like everywhere. This is like a true like nationwide thing. So that's kind of the first part of it, is like working with entrepreneurs. And then B, help individual investors participate in these rounds. Yeah, so Yeah. So Bill, the fund is primarily SaaS and technology focused, and like they invested in Republic, for example. So like, crowdfunding platforms, blockchain, crypto, education, um, I think some healthcare, anything tech related, nothing, in oil or gas, nothing really in real estate. So it's got a very tech heavy focus. And I'm going to do a class on this next week and kind of an official announcement to everybody, because I know not everybody's in here right now, but I'm going to just kind of explain like what that looks like and like who I can help. Because I know, having talked to a lot of you guys either here in Austin or in the Cayman Islands, like some of you guys are working on some pretty interesting stuff. And my goal is for those of you that do want to raise capital, connect you, and those of you that do want to become like VCs or angels, like how to do that the right way. So that's just something that I am super, super stoked about next year. And then also the fifth part, my fifth plan of action for next year is, preparing for increased volatility in the stock market. And so we are going to be adding some stuff to the Skill Incubator. Again, when the crypto markets are slower and you have more bandwidth, even if you've never entertained, traditional stocks, bonds, equities, all this other stuff, like there's opportunity there, very real opportunity. And so we're going to just add things. We're not going to, I saw somebody make a comment like, why would you want to dilute what we have? That's not our goal. That's not what we're doing at all. We're just going to add more and more value. We're bringing some really heavy hitters in that have excellent experience in what they do and what their niches are in the markets. I'm super stoked for that. So we're going to be preparing for that volatility in the stock market. I'll tell you this, like, I consider myself like a retired trader. I'm never going to be a day trader again. I'm never going to, sit down and spend 10 to 15 hours a day, 5 or 6 days a week in front of my computer day trading. But I am interested in maximizing opportunities when there's a lot of volatility in the markets. And I just feel like right now, like going into 2019, I'm figuratively and literally placing bets that we're going to see more volatility and there's going to be a lot of opportunity in markets that we really haven't talked about now.
So basically it's just expanding to diversify income sources, right? We're big fans of multiple streams of income. Yep. And obviously to be able to diversify, expanding into other markets and even other entrepreneurial pursuits or business or so on and so forth is just a really great way for people to set a good foundation. And ultimately, your goals for the past, 10 plus years or how long you've been doing this has always been building wealth, right?
Yeah.
And crypto has been very, very hot the past few years. It's been a very, very hot market. So, obviously last year, crypto consumed, 100% of our energy. Oops.
Yep. And Rocky, to your point, I mean, the ethos of Skill Incubator is, build multiple sources of income that are essentially, quote unquote, risk-free. Like the markets, like any money you're putting in the market has immediate risk. So my message is like, look, create multiple streams of income that can support your lifestyle, and then invest that and either actively manage it or passively manage it or a combination of both. And so one thing that, I'm kind of getting ahead of myself, but one thing that we're going to be launching, one of the first steps, is just kind of like a comprehensive, like personal finance curriculum. Just because I realized, like, having had so many conversations with you guys, like how many people don't really have a foundation of minimizing taxes, maximizing, like tax advantaged savings and retirement accounts. even stuff like how to build business structures to maximize your deductions and how to, just leverage and create like a really strong financial foundation. Because, looking at like the data, if you're just like a passive investor in markets, your biggest expense is not your financial advisor, it's taxes. And it's crazy how many people like don't really understand that. So I have a tax team that I work with. I'm by no means a tax expert, but I have some really badass people that I work with, and I want to like bring them to you guys and just really help you build like that foundation. And I know we have people like from all walks of life and all different levels and different points in their life. Some of you guys have made your FU money and you're just ready to lay on a beach somewhere. Some of you guys are just getting started, and I know a lot of people are somewhere in between. And so, yeah, man, that's something I'm really excited to roll out.
Yeah, and some folks are asking if it's just U.S. based or international. I think there definitely will be some stuff U.S. based, but for sure international as well, since we have a global community. So, and
yeah,
even though some things differ from jurisdiction to jurisdiction, usually, there are some core principles that remain the same no matter what, right? It's just slight differences in tax laws, but as far as like, generally accepted accounting principles and so on and so forth, there tends to be international standards with accounting. And so or even in business, right? Marketing's marketing, right?
Yeah.
Or business investing is business investing and so on and so forth. Just like how you can look at, technical analysis and you can chart any market, whether it be, equities or crypto or other commodities or so on and so forth. So,
yeah.
So there will be a lot of like general value that for anybody from any part of the world, and unless of course you live in a tax neutral jurisdiction like Grand Cayman and you don't have to file or pay anything, in which case you don't really need that component. You're already miles ahead of us.
Yeah. And just talking about like international versus US, like obviously I'm a US citizen, so I can only speak to that. But yeah, we're going to bring in people that have expertise in those areas. Yeah, thanks, Galaxy. Yeah, I mean, that's our goal, right? Like, my thing, okay, so I have a couple of things, and I don't want to get ahead of myself, but the gist of it is like, I want to show you guys what I'm doing and what I think works. And I think the worst thing that you could do in a market is try to like stick with what you know and don't evolve, because the markets are always changing. Like back in like over 10 years ago, day trading was incredible because you had this wild volatility. Like it was like unprecedented volatility. There's so much emotion, and you had different markets that you could trade for different sizes. Like it was incredible. And then it was like every year after that, it was like the volatility got less. And even the New York Times or the Wall Street Journal did an article talking about like the race to the bottom for day traders. And then it was like you had these billion-dollar funds that were fighting over like microseconds. And I'm like, this is insane. So like the worst thing to do is like keep trying to squeeze blood out of a stone or whatever that analogy is. And I tend to think in like 1 to 3 year horizons. Like it's really hard for me to think like 5 to 10 years out. I don't know what the world's going to look like that far out, but I can look at trends and I can look at, the way things are like developing on a multi-month basis and kind of create a hypothesis for what I think is going to be like the next big market. That's what I did in 2015 with Bitcoin. I went on like this speaking circuit, and I even wrote a book talking about why I thought Bitcoin was going to go through the next big boom and it was going to be the best market for traders, right? Sure enough, we had a few years of just really crazy explosion there. And so every year at the end of the year, I kind of reposition and I reallocate capital, and I start thinking about, okay, what does the next 12 to 36 months look like? Where do I think the opportunity is going to be? And then I share that with you guys, and that's just kind of, the best foot forward and where I think I can add the most value for you. So good stuff. All right, guys. Well, I know we went a little bit long today. Hopefully this is helpful. I know emotions tend to run high when there's a lot of volatility, and especially on the panic side in markets. So that's my plan. That's what I'm doing. If you guys have any questions, feel free to shoot me a message in Discord. I'm going to send an email early next week that'll talk about when we're going to do the class to kind of officially launch what the things are that we're adding for you guys and what that's going to look like. And then, yeah, that'll lead us into the end of the year. And I'm just looking forward to having a really kick-ass 2019.
Absolutely. Sounds good.
Awesome. Cool. All right, guys. Thank you so much for hanging out with us. And we will talk to you a little bit later.
All right, folks. Take care. See you all tomorrow. Cheers.